to Power Producers Shop Talk, where we are refining and redefining the sales game by equipping you with the tools you need to differentiate yourself in the marketplace. Tactical skills that will help you provide deliverable value to your clients and prospects.
Here, these are conversations that will differentiate you from your competition. Now, if you don't want to be different than your competition, probably should just go ahead and shut this off.
And action items that you can provide to take your prospects and clients to the next level.
Like when we audit the mod and do the mod master and give them the actionable items that they can do in order to lower their cost of risk.
This is Power Producers Shop Talk. Production redefined.
Reasonable and what wasn't, and I think that that's spot on. And these people that we're talking with don't necessarily understand what their exposures are and what they can even do about them when they're uncovered. So I do like that what we're able to provide is something tangible, action items that they can do.
Are you ready to feel the power?
Hey everybody, welcome to Power Producers Shop Talk, episode 6. In this one, we're going to talk about 3 things, maybe 4, depends on what kind of mood I'm in, to think about when leading with workers' compensation. So if you have thought about trying to get into accounts based on workers' comp, this is the episode for you.
There you go.
What would you say numero uno is?
I would talk about their mod. That's an easy thing to talk about.
Yeah, I agree.
That's
definitely number one.
Probably the most obvious. I would also take a look at their carrier and kind of figure out if they've got dividend options, if they've got pay-as-you-go options. That seems to be a way that we win a lot of deals. A lot of
those are basically the 3 I was going to talk about. Like
there you go.
The mod, program structure, and payment structure.
Yeah, I don't know that there's really things to lead with other than that. All the other stuff is a little bit more of a deeper conversation once we get in there and we're talking about those things.
Yeah, there's a lot of pivots too. I think sometimes people think about if you're leading with comp that you're going to go in and that's all you're going to talk about, but
it's related to a bunch of different things.
Yeah, I could talk about your auto because you've got comp claims that are a result of auto accidents. That's a problem.
Right.
I could talk about your medical, your group health benefits, because if you have frequency issues that look like they could be Monday morning comp claims because your benefits suck, we could pivot to that.
Totally.
There's a whole lot of things that you can glean from it. So, for the agents out there that are going in and you don't have something tangible that you can talk about to generate the conversation, probably pretty good episode for you to listen to, because there's a whole lot of different rabbit holes you can go into from leading with the workers' comp. That doesn't even mean, I think sometimes people misconstrue what we mean when we say we lead with comp, in that it doesn't mean that that's, even the first line of coverage that we write.
Yeah.
You might not even write the comp first. Comp might have a different date than other things or whatever else. I'm literally talking about we use workers' comp to start a sales conversation. That's the easiest way to put it.
Yep.
And for me, in Florida, it's beautiful. There's a lot of states that, I've found over time, through Killing Commercial, people have started digging around and looking at different resources, and they have found out that their states also have workers' comp databases.
So that's what I was going to ask you about, is what other, obviously I'm very familiar with Florida, and that's about it.
Texas is one. The guys that I worked with in Texas in Killing Commercial had no clue that they had this database out there. Meanwhile, you can
and
go
it's
in
even more interesting out there because it's a competitive market where they can.
Yeah, and you're not even required to have it.
That's so crazy.
You're not even required to have comp in Texas.
That's got to open you up to so many lawsuits.
The responsible businesses, the middle market companies, the people we would be calling on, all have it anyhow.
Right.
So it's really no different, but it's competitive. It's weird when because over the course of my career, I've ended up writing comp in other states, like North Carolina was one.
Mm-hmm.
And the quotes came back and they were like all over the place. I'm like, whoa, wait a minute. How's this work?
Yeah.
I'm not used to seeing that. I'm used to seeing the quote be the same number no matter what.
Right.
And, you earn your stripes based on what you can do from a structure standpoint or a dividend or whatever else. But I mean, I think that the mod tells a lot of stories, and it's a very easy way to start the conversation because it's tangible. And, I was talking about this with Mike McDonough in one of the very first conversations that he and I had, because Mike is very intense on the back end of a workers' comp claim, right? That's his deal. Is he wants
his
to get
process
in there.
was amazing, man. When we had him on here talking about that was pretty cool.
Yeah. And so, but I told Mike, I said, look, from a sales perspective, your job to get an account closed using that as your basis is way more difficult than mine, because he couldn't understand why I like to lead with the mod and mod master.
Right.
And so he's very intrigued by that because he didn't really put a lot of stock in it originally. But what I told Mike was this: when you go in and you're leading with what you do for people when they have claims, you're basically selling a concept. You're selling something that you're trying to get them to understand and believe in and make a buying decision based off of how well you're able to articulate that concept, which he's very good at articulating the concept.
Yeah.
So I'm sure he closes plenty of business doing it. But my argument was the difference is when I go in and use ModMaster, I'm not using a concept. I'm using their own numbers against them, and they can't argue that. Right. Like people,
we're showing them a tangible issue that they have. It's not. They
try
facts.
and argue with you. They try and argue it, but
love that.
Sorry, your argument doesn't hold water. These are your losses. So what am I missing?
Right.
And so I mean, I think that's one of the reasons why I do like the mod so much is because it's very easy to. They can't argue it.
It's science.
It's an easy, it's easy to explain to them and hopefully get their buy-in. The other thing too is though, the other reason I like leading with the mod is because so many of them are wrong. Like, it gives you the opportunity to create doubt too, right? So, okay, well, there's no doubt that you have horrible losses, but how do we know that this 2.23 mod is correct?
2 of the last 3 cold calls, if you will, that I have brought on have been going that route. Right. And their mod has been over one, going in there and showing them that their mod is not even correct. Like, it's a fact. Based on your loss history, based on your payroll audits, your mod is 20 points higher than it should be. You're paying 20% more than you should be based on your losses. That's gotta, I mean, as a business owner, that's like, so the most recent one, I was having that conversation with the bookkeeper, and she was like, well, we've got a lot of other stuff going on right now. It's just not a priority for the owner. I go, I'm sorry. In my experience, money leaking out of a business that's controllable is always a priority for the owner.
Yeah,
that lady's not there anymore.
It's obvious, Miss Bookkeeper, that you're not the owner.
Yeah, and I mean, so
you really just say that you're supposed to be responsible for the money.
Well, I think that might be one of the reasons why she's not there anymore. So
yeah, it's crazy. It's but so many of them are wrong, and I mean, if you get to the point where they'll let you actually do the audit, and then you get to go in and sit down and explain that to them.
Yeah.
Like, you're really ruining somebody's day when they're thankful that you show it to them,
but they're like, dude, we've been getting blasted for so long.
Yeah, they've just been getting kicked in the freaking shins
for
worst. How long, and yeah, my little brother went through a stage where he kicked people in the shins. It was really almost like an Adam Sandler movie or something. I'll never forget it. I was in like 6th or 7th grade.
I would punch your little brother right in the throat.
It was so embarrassing. My family, people would come over to the house for dinner, and my mom and dad would introduce the kids, and I'd go up and shake their hand, and my sister would not make eye contact with them like she normally does. And my brother just
kick him in the shins.
Just kick him in the shins as hard as he could. Like, the most obnoxious kid ever.
That is fantastic. That is
why
like an Adam Sandler movie. That's great.
Why did you even think that was reasonably good? But I mean, that's what I equate it to is these people have been getting kicked in the shins and nobody's taken the time to explain it to them. And it's interesting because these are not small accounts,
right?
They don't realize that. And so that's a big deal, I think, when you can go in and get them to allow you to do the audit. And then if you sit down and you present, if they give you the information to do the audit the right way, and you present the audit the right way, you should win every time.
So what do you mean by presenting it the right way? Like, obviously each situation is different, but what's the right way to present it without being a dick?
Yeah, I mean, that's important. You have to start off by educating them on what the mod is and how it's weighted and helping them to understand, the different things that can factor into it. And, it can be affected by, severity and indemnity claims and all that. It can also be affected pretty badly on frequency if you've got a ton of tiny medical only claims.
Right.
It all just depends on what the risk profile of that organization is. But I mean, it's important to educate them and help them to understand it. It seems like most of the time when we're engaging with people, it's usually the same story over and over again. It's typically not a horrible frequency problem where there's like 1,500 different claims.
It's like one bad one.
Yeah, or it could
Indemnity.
be a few small dollar indemnity claims that they never should have had. So I mean, and you know this because you've been in enough calls with me, but I always make sure that I explain to them the split point because even the agents that do a good job of explaining return to work and that you should have it, they don't get into the why, right? They don't go in and say, if you would have had return to work and you would have brought this person back and this amount of indemnity wasn't in the claim, then this is what your mod would have been. But instead, you're spending this much over the next 3 years. And they don't connect all those dots and put that piece together. And for every state, I'm pretty sure for the most part, I don't know 100% because I don't write comp in every state. We pretty much write in Florida and I've got some incidental stuff. But every state's got a split point, the NCCI states, and, business owners have never heard of that before.
No.
Like I can tell you,
most of them don't even know how the mod works. They know it's affected by claims, but not all the different ways that it could be that you just mentioned.
In 16 years of doing this, I have never gone in and explained the split point to somebody with a jacked up mod and they knew what it was.
Yeah.
They just didn't have any idea. And I mean, for those of you agents out there that don't know what it is, don't feel bad. I mean, you're in the majority. A lot of people don't. You're doing something to fix yourself by listening to this podcast, and I'm going to tell you what it is. So basically what the split point is in the state of Florida, it says that up to the first $17,000 in claim value, if that claim is medical only, the value of that claim is reduced by 70% when it's thrown into the mod calculation. If you have a single dollar of lost time indemnity in the value of that claim, 100% of it goes in. So the way that I position that is, the story that I tell all the time is the one of the church that I was called in.
Yeah.
They should have had about $30,000 in manual premium. Instead, they had 50 because their mod was a 1.44. When I looked at the loss runs, I looked to see the indemnity and the claims. Two of them struck me as really weird. There was one claim that was $75,000 and had $500 worth of indemnity, and there was another one that was $6,800 that had $150 worth of indemnity. So for $650, they allowed those two claims to go into the mod at full value. Now, if you're wondering how that $75,000 claim is calculated, you still get the discount on the first $17,000. So even though it was $75,000, you would only get it reported at 30% of the first 70, and the rest of it would go into the excess layer. And so, they would have saved significant money. So what I did to demonstrate that to the person I was meeting with was I ran the mod master report twice. I ran it once to validate that the mod was correct exactly as it was laid out. And then the second time that I ran it, I pulled the indemnity out of those two claims and I coded them as medical only so that the split point reduction would be in there. And basically what it did was it dropped the mod by 24 points. So the mod went from a 144 to a 1.2. Well, what that meant was that instead of those people paying $650 now, or allowing the carrier to pay the indemnity and then having the carrier invoice my client, or this person who was not my client, invoice them to allow them to pay the carrier back for the indemnity so that it wouldn't be on the mod, they just allowed everything to flow through. So they could have paid $650 today. Because they didn't, over the next 3 years, they were paying $22,000 in increased premium because the difference was 0.24 on, almost 30,000 in manual premium. And it's a no-brainer. And sometimes it's so crazy, people don't believe you.
Right.
Like, I could not get.
Like, I think the numbers are like made up, that it's just like I know the story. I mean, obviously you've talked about it before. It's just like, that's your opinion. They're like, no.
They've never heard Splitpoint. They've never heard Splitpoint before. So all of a sudden, I'm Johnny Splitpoint. I'm coming in telling you fictitious stories about mod calculations.
Interesting take, David. But no, it's crazy because when I was hawking the office supplies, I mean, I'd sit there and fight with them over, an $8.79 ream of paper versus the $8.59 that they're paying at Office Depot for the carts, whatever. And then they're sitting there and they're blowing $22,000 over the course of 3 years each year on workers' comp. It's awesome.
Yeah. And so, this person was not interested in hearing what I had to say. They were not believing me. They were defensive from the second I walked in because they had a very good relationship in their mind with their incumbent agent. And I said, hey, why wouldn't you? You're paying the guy to do nothing for you. He actually gets paid more because your performance is
getting
terrible.
A raise.
But
dude, you should have had your little brother go in there and kick her in the shins.
It would have been so awesome. But, I told her at that point, I said, I decided 15 minutes ago that you were not going to be my client. It's obvious to me there's a complete misalignment in how we think in execution. So rather than me be your client based on how you've chosen to handle this, I wouldn't mind being a lender, So if you're willing to pay me $22,000 over 3 years for every $650 I'm willing to lend you, just
deal.
Tell me your number.
Yeah.
I'll run to the bank right now.
No kidding.
Good grief. So, yeah, I mean, if you show somebody their own numbers and they're that hard-headed, then sometimes cut bait and walk away, right? And I did. I was there because one of my friends is the one that referred me in. The church was behind $100,000 in their budget, and they were looking for ways that they could improve. And I pointed that out, and this person was responsible for that, and they didn't like that I pointed it out. And at the end of the day, I did what I needed to do for my friend. So
that's the mod. Let's talk about the structuring of the program and or the carrier / pay as you go, because that's another wedge that we can kind of drive in there. And I think that a lot of times that's the route that we end up going.
Well, we do it 100%, right? I mean, I don't know why you wouldn't be on monthly self-audit or pay-as-you-go.
There's no reason. I mean, like, especially with the businesses that we're going after. I mean, I can't even really think of a scenario off the top of my head where somebody shouldn't be on pay-as-you-go. I guess if the premium is super low and everybody's salary and they, there's not going to be too much differentiation, whatever. But there's no reason for the average business that we're bringing on to not be on a monthly self-audit pay-as-you-go setup. And you can, based on their carrier, if you've done the research, what the options are. Like, so if I'm doing research on a business and I see that they are with Guard, like we had talked about, I know that they're not getting any dividend unless they're in, whatever the program, the hospitality, whatever restaurant program. So, that's an immediate wedge that we can drive there.
And they're probably not going to be on pay as you go.
Probably not, unless
because they've got to put a 15% deposit down with Guard,
right?
Not just the $200 expense constant.
Unless
they
they're
may
with ADP.
Very well be with ADP.
Right, exactly. So I mean that's a another avenue that we can go, especially if their mod is decent and they don't have mod issues.
Yeah, no, absolutely. I mean, I think that that's a big deal. is just knowing how to structure that, because audit is a huge wedge.
Yeah.
Like, people hate audit. Well, okay, I hate audit. I agree with you, but why
Totally.
are you having these
Yeah,
swings?
why is there a discrepancy? Right. So, again, it goes back to the agents not really know what they're doing as far as the workers' comp goes. But, there's a ton of people that I talk to that they're like, oh, yeah, we got slammed at audit last year for $6,000-7,000 bill. We're paying it off in increments. And I'm like, well, why was there that big of a discrepancy at audit? Like, well, I don't know, the agent said that our payroll was low. I'm like, wait a minute. You're not on a monthly self audit. Like, why? That doesn't make any sense. Well, we didn't even know that was an option. Again, it goes back to people just not educating their clients in the workers' comp sector. And again, that's why we lead with that, because there's so many people in our state and people that we compete against that don't do it.
Yeah, I think we're going to do another shop talk, in a few weeks on the top 3 pivots from leading with workers' comp, because that would be
Pivot.
good for
I think of the Friends episode where they're carrying the couch up the stairs. Pivot. You seen that one? No, whatever.
Yeah, one of my all-time favorite Friends episodes is when Joey wears literally every single thing from Chandler's closet and then starts doing lunges. It's a good one. The third one, and what we'll wrap up with, is whether or not they're getting a dividend. I mean,
Yeah.
I don't want to get into paid and incurred loss retros and dividend or deductible plans and all of that. Keep it surface.
That's a whole nother episode right there.
That is something that I will bring in somebody much smarter than me to try and break down, because I understand them, but I'm not good at explaining them. So, at least not in this vernacular. But with regard to the dividends, it's another area where if you're an agent that you're on top of your game, you can go in and you can differentiate yourself. That's one of the reasons why when we do the solicitation calendar 2 months before renewal, the letter they get is, will you get your max dividend? The thing is, agents don't talk about how the dividend is calculated, right? They don't understand that. When the quote comes out, they're literally looking at, okay, if I have this many losses, I'll get this percent back, which looks like this. They don't ever stop to look into whether or not there's a recapture provision. They don't ever stop to look and see when it's going to be valued. They don't look at the loss development factors that are calculated. They don't look and see if it's a percentage that's paid out at the beginning and then there's a second payment 18 months later, or if all the claims are closed out, is the whole thing paid right now? There are so many nuances in doing that. And, again, they just don't take the time. I really don't think agents, for the most part, even realize in many cases that it's not just as simple as, okay, 6 months after your policy's up, they're going to look at it and you'll get this back. It's not that simple. Right. And there are things you have to do to argue for your client and things you may want to negotiate on the front end to have the carrier get the deal done the right way. That's a huge, huge deal. And I mean, for example, if you were to go and take Summit, Zenith, and AmTrust and put their 3 dividends right, just boom, 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 right next to each other.
Yeah.
All 3 of them are different. How they're calculated, when they're calculated, conversion factors, all of that stuff. It's crazy. And so if you're not doing that when you're pitching these accounts to your clients, you guys are missing the boat, because somebody's going to come in and explain it to them. And when I was talking about our solicitation calendar, one of the things that we use as a hook in leading with workers' comp is, will you get your max dividend this year? Well, I don't know. I haven't really heard from my agent. Well, if you have your loss runs, I know you're going to renew in a couple months. Why don't we take a look at it and see where you're at? I can tell you where you're trending versus where we think you'll end up. And you can sit down and run a quick calculation for them. They're going to love you if you're the one who tells them they're getting $30,000 or $40,000 back. They'll forget they even have another agent at that point.
Absolutely. So, I mean, the recapture provisions and all that stuff, where can people find that information?
It's on every quote.
Yeah, it's right there.
I mean, it's plain as day. And if you don't know what that is, I mean, you probably need to. It basically says that if a claim opens back up and your loss ratio gets jacked, the carrier can come back and ask you for the dividend money back or a portion of it. You don't want that.
Absolutely not. I mean, especially if that's how you ended up selling the deal.
Yeah, no kidding. So I mean, I think that's a big thing for, everybody to be looking at. And if you're not sitting down with your prospect, your clients rather, as you're having the renewal meeting and you're looking at where year-to-date claims are trending and you're outlining, hey, look, you have a good year going and here's where we see you falling for your dividend. This is kind of where we're going to be if we keep on the same path that we're on. Somebody else is going to do that and they're going to have your client's ear.
Yep, absolutely. I
think I've beat comp to death for the most part, man. I don't know that there's anything else I can bring up with regard to leading with it. We could talk about the pivots, but I think that's its own episode.
That's a separate thing. Yeah. I mean, I think the three things that we got here are good for the topic, for leading in with it, man. It's you want to keep it simple. And these are three things that a lot of agents are just not talking about with their prospects.
Read your quotes, people.
That's it.
Read them.
Read your quotes. Know your split point.
Yeah, I mean, take the time. Monday morning, agents are going to go out and be like, the split point, recapture. Take the time to learn this stuff because This is what gets deals done and this is what keeps business on the books. See ya.
Later.
You've been listening to Power Producers Shop Talk. You can follow us at the Power Producers Podcast on Facebook and Instagram. And if you want to take your game to the next level, check out our commercial insurance training course at killingcommercial.com or visit Amazon to pick up a copy of our international best-selling book, The Extra 2 Minutes.